Well, hello everyone, I'm L.A. Little, and this is your weekly NeoTA wrap. Where we take a look at these markets, and we do it from a neoclassical perspective. Each time we ask ourselves one question: what happened last week, and what does it tell us about the coming ones? I do this show every Sunday night, broadcast at or before 10 o'clock Eastern Time, archived on YouTube under the channel L.A. Little. You can get it there, subscribe. Up on the right hand corner there, you can subscribe, and anytime content's pushed, you'll be notified, which is a nice thing. As far as these markets, not so nice. Got a big push back on Friday. We had big declines pretty much across the board. The only one that held up pretty well was the NASDAQ. NASDAQ's up on the year 4%. Everything else is breaking back to even almost. So all those gains in February all of a sudden are looking like they're going to try to go away. And why was that? Well, Friday we got the employment number, and if you look at that employment number and the details of it, what you see here is two things. One in particular, you see 295,000. They were expecting 230 on the consensus. So in other words, there's more employment, more folks going to work. That puts the rate, the unemployment level down a little bit to 5.5. It was expected at 5.6. The rest of this is not that much difference in terms of participation rate and everything. But the big number here is that. Why is that such a big number? Well, that really puts a kink into what this Fed wanted to happen, because now what they actually have happening is they have the dollar soaring on them. This dollar had been in a big push up, consolidated. Here it goes again. When the dollar takes off, that puts pressure on the equity market. And so if we look over here at equities, we're going to see the sell-off there as a result. So let me push over here. Here's the S&P 500. So it breaks down, gets up underneath the swing point low, gets under the retest, regenerate zone, and changes trend. And volume expands. What else can go wrong, right? I mean, that's kind of like everything you would expect and more. And so that whole hang up here finally gives way, breaks underneath the retest, regenerate zone. It tested it here, tested it there, breaks it here. Coming after that prior swing, that's prior range highs where these two swing point highs are, and it looks like it will test into those guys. That's a bad situation because of the employment number, right? They expect rates to go up. Market is just having a hard time with this idea of rates going up. And with the dollar going up, that puts earnings under pressure, right? So it's not so much the rates, it's the earnings that are under pressure as a result of a dollar. And on the rate side, with the market, with the employment number coming in as it did, lower employment, more people at work, bonds under pressure, bonds break that big swing point low that was there. It looked to me like it was going to hold, but as you can see, on that number, the volume comes in, swells compared to there, blows it away, goes down here and presses against that swing point low. Now it presses it with volume. It's going to break it. It's not going to hold. And so if we look at the weekly numbers on all of these, here's the weekly. Now you see that ABCD structure we talked about that potentially could set up, did set up, rates going up, bonds coming down, going into the bottom of that support zone that the TA Today charts are drawing for you. If we look at the S&P, and I want to pull these over now and look at them on a weekly basis. The S&P now is back into that range that we were just talking about. And so that high here and that range that was there, you can see the S&P is pulling back into it, coming into this little area of consolidation at the highs. If it breaks that, folks, it's right back down here to test the lows again. And so you can see, if this ABCD structure is to set up on the S&P, right, that could potentially get things higher, but this has to hold. There's just not much else. Question is will it? And if we look at that dollar, let me pop back over the dollar. This dollar says it may not. And the reason for that, of course, is the structure that's in place here. This came off the bottom last year, got the push, right? Did an extension, overextended, consolidated now for a while, and now has another ABCD structure as a result of that, and it's a monster ABCD structure to go higher. And so if this dollar continues to extend and it doesn't look like it's going to stop, volume coming into it, you got the Eurozone depressing their currency, you got the yen still being depressed, you got Chinese trying to depress theirs. We're the only one talking about raising rates, and you can see what that's doing to the dollar. That dollar is going to put a crimp on profits, and that's going to hurt the markets. If we look at the Russell also comes back into the range. So in other words, and remember, the Russell now had traded in this range all of last year basically. You had one little foray under it, but that was the October lows, right? But outside of that, the Russell traded inside this range the entire year. Well, we're coming right back into it again. If the Russell gets back into there, into these swing point highs, that's going to be a major disappointment on this index. So the Russell's on the cusp of coming back. The strong ones, of course, in particular the NASDAQ composite, the broad composite is the strong one. Now all of these, and I'll show it here because this one still looks the best, all of these had large ABCD structures in place that did not get fulfilled on the dailies or the weeklies. They also had range trade breakouts that didn't get fulfilled. And if you just take the smaller range inside these, you know, that range got pressed and actually got its target. But outside of that, the larger range, if you drew it a little bit larger, right, that larger range did not. That had farther to go, and certainly this ABCD structure did not as well. Now, in the defense of whether or not targets were met, and we'll pull this over to the daily, you actually did have targets met and exceeded on the NDX, on the NASDAQ, on the ABCD structures on the daily time frames, right? So they went up and they extended past it, and now they're coming back. So, you know, it's not as if they didn't reach their targets. The strongest ones did. It was always a question of rotation, and we didn't get the rotation. The listed issues, the small caps, they didn't get the rotation that they needed in order to press these markets higher, and the result of that is they finally roll back over. So that's the indexes, that's what they look like. Question is how far will they come back, and what else is there out there that tell us potentially what that is? And to address that, we'll come back here in a second and take a look at that.
Do you have retirement funds you want to keep invested, yet you constantly worry about a potential market crash? As LA says, you shouldn't worry about a crash until it's time. Through LA's extensive research, he has identified the key characteristics that are necessary for a market crash. In the 2008 crash, for example, our investors actually made money and avoided huge losses through LA's investment advice. Because the markets usually go up, our retirement service keeps you invested when risk is low and reduces your exposure when risks become elevated. There are 3 portfolios you can follow: aggressive, balanced, and conservative. It's a simple process at a reasonable cost that requires very little of your time. To learn more, go to our homepage, hover over Retirement Service, and click Get Started.
Well, hello and welcome back, folks. So, if we look at the world markets and ask ourselves, can this market go higher, that being the domestic market, world markets certainly say that. And in those markets that say that are the markets that are depressing their currencies. Yen is one of them. You can see the yen, the effect on the Nikkei, right, pressing higher. This has a ways to go still on this ABCD structure to the top side. That's the yen. If we look at the German market, ABCD structures in place there. They've already extended and continue to extend. If we look at the FTSE, right, they also just broke out and they're hanging at the highs. It's a little different because they're not the euro, but they're getting the sympathy trade off the strength in the CACs, for example, which has gone up and pressed up to new highs as well. So those places In particular, the Euro countries, anyone with the Euro, not just these 2 or 3, but the Euro itself, devaluation. The yen, devaluation. And there's some discussion of potentially that happening in China, but so far as you can see, China isn't really benefiting from that idea. Neither is Hong Kong. If we look at it, these are struggling. They're struggling up at the highs and having a hard time getting higher. Where else do we have devaluation? Well, Australia has been devaluing. And this is even resource commodity country. You would think they'd be doing horrible. I think there's a real risk of investing here too much, but new highs. If I look at where else is some devaluation, India has cut rates twice now. The Indian market has pressed up to new highs. And if you just go down the list, now look at an opposite case. Here's Brazil. Brazil has increased their rates, just like we're talking about increasing ours. Very different picture. It is all about where the cheap money is now. And the United States is not expected to be the cheap money. In fact, the dollar is telling us it's not. And that's pressing against our equity markets, and it's going to continue to put pressure on those markets as long as the belief is out there that these dollar is going to go higher against other currencies. Let's swing over to the ox market. We had some major damage, not just there, but if you look at like emerging markets, for example, they're coming back to try to test the lows. If I look at the currencies, because we were already talking about the euro being pressed lower, look at this demolish. This thing has gone from 136 to 106, and it's done it straight away. I mean, there has been no break whatsoever. One little bitty pause. Outside of that, straight down. And we look at the yen. And the yen has been pausing and consolidating here, but it's going after its lows again. Then if you go and look at commodities, and we'll just look at the continuous commodity index, well, that one's not going to tell us much. We got a bad quote on it. But let's push over. Let's see if we can grab it. Go in here, for example. Let's look at maybe the grains and see what they look like. So here's the grains on the weekly, pressing lower. And we see it right across the board. Let's go to the commodity market metals. And we start here with the silver market. You can see the silver market, it made its push up, right? Came into that swing point low, never got over it. This has been the weaker of the two between it and gold. And now it's pushing back down and wants to test these lows. The bear market in these metals isn't over. There was this, if you looked at it on a daily, it looked like it was really doing something, right? But if you pull it back and look on the weekly, it was still questionable. And if you look even longer term, it's a tough road here because it really hasn't been able to get back up and over anything. Swing point low, test into it, now it's trying to regenerate lower. Looking on the gold market, the gold market looks the same. You get a press up, and the gold market actually got extended over that high, this swing point low, put it into some sort of a sideways. As it came back and tested here, could not hold against this bar. That was a key bar. And let me just draw it in here as we talk. This was a key area. Was unable to stay there. What does it do? It just gets whacked, coming after the lows again. And if we look at that on a daily, you can see the kind of damage that was done Friday off the employment number. Huge damage. Gaps down, breaks multiple swing point lows on the daily time frames, going after the weeklies, and then looking at it on the monthly, going after the lows again. And so actually the monthly was the best one here to look at because that swing point lows high was 122.32. We got over it 123.45, stayed one bar. You didn't get the next bar. You usually want to see at least one more bar to tell you it's real, and it didn't quite give it to us. And I guess that was the key there. So if you look anywhere other than those markets where currencies are being devalued, it's a tough road. It's a tough message being spoken, and that is that it's going to be hard for these markets to lift. And we'll come back with the final thoughts on that here in a bit. But first, let's turn our attention to some viewer questions. Okay, folks, well, the first question here has to do with the Dow Jones and the transportation index, and it has to do with the Dow theory. And the Dow theory was something that was hammered out by Hamilton in a series of articles in the Wall Street Journal back in the 20th century, early 20th century, saying that, you know, if goods move via the rails and then they get bought via the Dow Jones, and those things confirm each other, then that will allow us to, you know, understand the longer term trends and stay with an uptrend as long as those things keep confirming. So in other words, anytime the transports move to a new high, you want to see the Dow do the same. Anytime the Dow moves to a new high, you want to see the transports do the same thing. And that was the theory. And so that theory still is followed by many. And you know, that's basically what the theory is about. And if we look here at the transports, and I'm using the weekly to cut out some of the noise and using the IYT here as the mechanism, you can see here that this hasn't made new highs, right? I mean, it's been going down, not up. And so there is no new highs since about November of last year. So there was a spill in October. This thing came roaring back like everything else, made a new high, but since then has been able to get over it. So this bar, let's get the date on that. That bar is November 24th. Now if we switch over and put the Dow up and look at the Dow, what we're going to see here is that the Dow itself has made new highs. And so you just made new highs on the Dow. So that November 24th actually was back here on the Dow. It was this bar, I believe. Yeah, that bar. And so the Dow had made new highs, right? It had gotten over these. And the transports made new highs on that bar. The Dow comes down, goes back up, makes a new high, comes down, goes back up, makes another new high. Yet the transports have been unable to do the same. That says, okay, you have divergence, right? But that's only one piece of the equation. The other piece of the equation to get a sell signal is that you actually need to make lower lows and confirm, right, those lower lows. And so far, you haven't done that. So the Dow made a lower low here, hasn't gotten underneath it yet, and so that break hasn't happened here. And if you go back over and you look at the IYT on the weekly, the IYT is the same. The IYT made that new high, makes a low, hasn't really gotten underneath it yet. So we don't have the sell signal, but we certainly have the non-confirmation on the buy. And so at this point, you know, it's a toss-up, just like this market is in general, no matter what theory you use. It's a toss-up. It's a range trade, and it continues to be. Okay, so that's that one. Let's take the next question. So the next viewer asked about Disney, and Disney reported earnings. This was back here on this big bar up on February 4th, big spike up, right? And since then, it's just kind of climbed higher. And so the viewer question here is what's your take on a buy point on the weekly charts, please? Had a big bar up in February. Nobody seems to want to sell it. It just grinds higher. So let's look at this one. So we get a push up, right? Swing point lows here. It's grinding up, and then it just starts to drift back down. On a daily, and then I'll go to the weekly. On a daily chart, you know, this is the bar, right? This is where it's going to come back to, and that's the buy. And you can see the TA Today charts giving you the green right there. So that's the ideal spot. Let's look at the weekly. So on the weekly, you got the big bar up, and same thing. So, you know, I don't think you want to, I mean, maybe you trade it off the weekly if you want to be a longer term buy, and your stop has to be under that low, 90.06. But if I go back to the daily, you know, the buy is on this bar. The top and bottom of the bar, essentially 101.94 down to 98. That's still going to leave you $8 to $10 downside. That's a pretty big percentage. If, you know, ideally, you know, I would probably trade this off the daily, not the weeklies at this point. And that is I'd give it the bottom of this bar and then a little space into the gap, and it just really shouldn't trade down there again. And so my stop might be at like 97 or something. If you want to be safe and still give it more room, you could put it at about 96.01. It really shouldn't trade under that. And that would give you a, yeah, that should hold it, right? But that would be the spot, right? It's top of this bar, bottom of that bar. This little green area is where I'd be shooting for the main price point. And yeah, it looks great. I mean, it looks like it's going to go higher on all time frames. So that's Disney. Let's take the last question right quick. Okay, so the last question has to do with Deere, and there's another with bonds from the same viewer. The first one is he's holding this, wondering if it can go higher. Okay, so and I'm pretty sure this is on the daily time frame. He's looking at it. The issue is here, right? That's the retest regenerate zone. It's underneath it. It got under it on Thursday and actually got under it again on Friday and held under it on Friday. And it pushed Friday with some volume. It certainly looks to me like it's going to try and trade lower. It did hold. You know, the good part is it did hold this bar. You know, personally, if it's me, I'm putting a stop right up under tight up underneath here somewhere, and just not going to give it much more room. You got these two swing point highs, and you have this low. If it can't hold this green area that you see, you really got to say goodbye. So that's the charts are telling you the support is here, and that really is where it is. If you look at this, if it can't hold that area, it's going to trade lower. And matter of fact, it traded right to the bottom of that area on Friday, underscoring how significant that area is on the support zone. So that's your support zone. I'd put my stops under there. As far as where do you sell or whatever on the way back up. If you can get out up here around 91.37, which is the low of the high, that would be an ideal spot maybe to take some off if you're wanting to get out. It's still, it's going to trade with the market is the problem, and right now the market's struggling. And so, if the market continues to be under pressure, this is going to continue to be under pressure, no matter how good the chart looks. Most stocks will move with the market, not against it. And these stocks like Deere will be no different. So that's kind of the way that one shapes up. The other question has to do with bonds. We covered the bonds already, but I'll come back to them. And viewers want to short these. And as I said, you've already gotten a break of this swing point low on the daily. That low is 125.92, and on the weekly, you're just about to break on this weekly. When that breaks, it's going to come straight on down here to the 120 area and potentially to this low about 118. And so, yeah, there's room here to trade this thing short. I've already shown you the ABCD structure on the way down. It's targeting at least that 120, probably about 118. And it probably is just going to straight away go there. And if I look back on the daily, so the question was, if it consolidates, would it be a good idea to short it? I don't think you're going to get much consolidation. I think it's just going to keep trying to work lower. You might get a little bounce out of it, but this thing wants to go lower. And so if you're going to trade it short, you're going to have to find a place, intraday to get short. And then, if it goes in your favor by the end of the day, then you can leave it on. And if it doesn't, then maybe you come out and you try it again the next day, and just try to wedge yourself into a position is the way I'd be trying to do it. Okay, well that's it for viewer questions. Let's come back with the final thoughts here. Okay, folks, let's look at the final thoughts here. If we look at the S&P, right, and I like to use it because it's a broad-based index. We could also use the NASDAQ composite, which looks just as good or better. We've had an extremely long, steady run to the top side, right? And some folks will draw channels and all that business. Whatever you want to do with it, I mean, it's pretty hard to argue that you've gone from roughly 1110 to 2110. That's 1,000 points in the span of about 3.5 years. And it's been straight up. I mean, no major corrections. There's been some spills of, 8, 9, 10% right here, another one there, and then the October one was about 9. But that's it. I mean, other than that, it's just been steady up. So you haven't had a 10% plus correction, in over 3 years. And what is that? That is July, it's about September was that low of 2011. So that puts you about 3.5 years. When's it going to change, right? Is it now? Well, right now, this is nothing but a little blip, right? I mean, really just a blip. And if you go back on the S&P and you look at the high here, 2018-19 is the high that should have pretty good support off that October spike back up. And so 2018, let's get that number again, 2018 roughly, if we come back to the weekly now, 2018 is going to put you right into the support zone. Amazing how that works out, huh? 2018, where does the support zone show up on the TA charts? Right about 2018, right in that area. And I suspect that is where the strong support's going to be. And why is that? Well, back here, if you remember, and you've been watching this show for a while, this was the December Fed meeting and the spike off of it. So this was the Fed spike and the follow-through spike. That little area there is a strong area of support. It's right in the middle of these green bars. That, I would suspect, is going to be very strong support, especially if this just comes straight back. And that would probably be an ideal spot to buy it if it does that. Now, if it bounces around up here for a while first and then eventually comes back down, well, then it's a little different story, right? Because then you know, it depends on what the structure looks like. But that's assuming it's even going to come down. We don't know that, right? This is on a daily. Look at it on the weekly. This could end up being just an ABCD structure to the top side, right? I mean, a pullback that holds in this area could lead to new highs. So it's a little premature to assume that this market is done. Matter of fact, it's extremely premature to assume that. Now, if you're trading on a time frame that's very short term, then you have to protect when the market starts to turn and you get something like this. If you're trading off of this time frame says, hey, something is wrong. The market didn't do what it was supposed to do. What it was supposed to do was to go finish off those ABCD structures to the top side. It was supposed to go here, right, and up to there, about 2130 to 2140 area. That would have been, you know, the top of that ABCD structure. It also would have been this projection on the way up as well. And so from about 2130 to about 2140 or so would have been the number. Didn't quite get there, right? Got to 2120 almost. Now it fades, rolls over, comes back, and violates the retest regenerate zone on the third attempt. That says, hey, for now, on this time frame, it's this way. On the other time frames, it's still up. So consolidation at best, probably on this time frame. After that, you got to assume that it's going to try to go up again. You have to stay with the ideal the trend is your friend until it ends, and it hasn't ended on the longer term time frames. That's weeklies and monthlies, only on the short term. Consolidation, potentially more push to come. We won't know that until later, right? It has to do some more time here and show us what it wants to do. But the fact that it didn't do what it didn't do what it should have done tells us that for now it's going to do something different, and that is consolidate. All right, I'm going to leave it at that. Thanks a lot for joining. If at all possible, you know, tell a friend, tell two. You know, help us, you know, grow in a viral way. You know, tweet this, put it on your Facebook, whatever you can do to help. Always appreciate it. Have a great night, and I'll see you as the week gets underway. Take care. Good night.